Hi, welcome to the market alert for Wednesday, the 4th of September 2024. So stocks tumble in tech-led weakness on return from Labor Day. That seems to be the opinion here. There's no news really about what happened yesterday. US stocks were slammed on return from Labor Day. That's all we're seeing there. US stocks were slammed on return from Labor Day weekend, with the Nasdaq underperforming amid a slump in the tech sector, which saw losses of 4.5%. So no news. It's just like a massive shakeout for yesterday. Economic news today to bring some stability is the JOLTS at 3 p.m. Other than that, the market again will have to make its own mind up like it did yesterday and see if it continues to move to the downside. But certainly one of those strange days that came out of nowhere yesterday. And no news to back it up either. So it'll be interesting to see how the market unfolds from here. But let's kick off and have a look at the Dow and work our way through to the metals. So in the Dow there, you can see the market dropping 739 points from the high to the low. And overnight we have weakness as well, which is certainly testing the low of yesterday, which you can see there. There's the low for yesterday, and the market already testing this on the overnight market. But yesterday started out and it was fine. It got resistance at the 200 MA there, was offering a bit of a ceiling. The cash market opened and then the selling came in. Now the only thing that I will say is the last few weeks we've seen that pattern of bringing the futures prices up on the electronic market for the stocks and then selling into it. So I wonder if the selling was just too much, having that one day where the market was closed on Monday and so many sell orders that were lined up there. But if we just go back to the daily chart, you can see that at the moment from this low up to this high, we're at 78% retracement, and we could head down to 40,686 there. German DAX the same after a V-shaped correction and moving back up to the all-time highs and creating another one yesterday, 7 points off the 19,000. I had an order in, just a speculative one, at 19,001, but the market didn't get there. And as I mentioned in the market alert over the last couple of weeks, when you get an all-time high, the market does like to pull back. But this is a hell of a pullback for yesterday, and like I say, particularly based on the fact that there's no real news either. So the downside target, really, if the averages don't hold, is going to be around 18,281, which brings you into this area here. But we've got the 20 bar moving average, the 50 EMA and the 200 yet for the market to pull back to if it so wishes to do so. JOLTS today, ADP tomorrow, and non-farm payrolls on Friday. In the 30-minute chart, it says it all. The market just straight down there. Let's just have a look, see how much the market dropped off the high yesterday. And you can see down to the close of the session, the market dropping down 371. Big drop for the DAX, that is. And and already through the low for yesterday as well. So some weakness coming in there. Maybe this is the start of the autumn unravelling, as we see in the markets on an annual basis. Before then we get the October to December Santa rally. So interesting to say the least of why this happened yesterday, because there's nobody's giving any reason as to why. In the S&P 500, same thing, market down, but at the moment currently trading below the 50 EMA as well. In the 30-minute chart, you can see the market moving all the way down there, and also trading at the moment below the low as well. In the UK, the FT100 also still selling off overnight below yesterday's low, big bar to the downside as well there. And in the 30 minutes, it was red all the way apart from two green bars there. So the FT100 staying short, and as we've already noted, the market is already below the low of yesterday. So US dollar up again yesterday, so huge pressure in the metals. So let's have a look at those. And silver again hammered to the downside. This is not over. 26.41.5 is likely to be retested. At the moment we're finding support at the 27.82, 27.49, and then we have got the 200 MA, which currently ties in with this low over here. So we're looking at 27 sort of look, 16, isn't it? Yeah, 27.16 at that level. This is really the most important level because this saved the silver price last time. So if we don't get down to 26.41, watch the 27.16. Everything was okay. The market was holding up until, yeah, you got it, the usual nonsense at the London fix slammed the price, and then you can see we get a bit of a bounce once they've done it. So they get out of the short positions, and then the market's free to come back above the low of yesterday. Meanwhile, gold holding really well and nearly back to 2,500. So if we have a look at that in the 30-minute charts, you can see it was a lot more volatile in gold as prices saw some selling, only paper, no physical, and then prices brought back and above the DP. So let's have a look at the gold-silver ratio. Well, no surprise here. Yesterday I said we would head back to 90. We still are going to head back to 90, if not higher, because they're not done with slamming these markets. And the reason I say that is because we've got the 3 jobs news, so they'll still use that to slam unless the figures are so poor. If they can be relied upon, then it will reinforce that there will be a rate cut at the end of the month, which will support the metals. Other than that, particularly silver will be hammered once more, and we'll get through the 90 this time on the gold-silver ratio. Right, so have a quick look at yesterday's trades. So we started out in the morning with a potential buy signal. The market shot up to begin with, and then we see prices trading back, pulling back after we put in a new all-time high up here. This had become a resistance area, but yours truly was hoping the market was going to go up to the red line, the 19,000. We managed to get up to 18.99, and I thought I'm going to hold this position, and I did, but then the market just decided to fall out of nowhere, and that was it, and that's how it remained. Market sideways, sitting on the 50 EMA, and prices then moving down, as you can see there, then through the 200, and it just kept drifting all the way down, and there was no end to it as the Dow futures also showed weakness. Market finds a bit of support down there, and then we get to the afternoon session where we see prices sideways, then down, and then we go down and we test the low, and it's when we get to the return back to the low that it gets interesting, because we have a potential buy signal that's not filled, then we get a potential short which is filled, then we get another potential buy signal because the other one isn't taken out. And if you get this situation, you stick with the original and not putting the 2 trades on, as been noted in the course, and then the market puts in another short, and then down we go and retest the low to the left there just to make back some of the losses there. Very strange afternoon there, but that was because the Dow was trying to obviously work out what it was going to do, and then prices just stuck in a range. So a very weird and strange day is any way to describe it. The market not hitting that 19,000, just below it, as you'll see there, and then heading down for the remainder of the day. For whatever reason, I do not know. And if anybody does, then pop it in the comments. Right, overnight, the market, there's the low, and you can see we're already trading below this as well. And then prices looking for the S1 there, support, and the averages all pointing to the downside, which obviously doesn't mean that the market will continue lower, but that's its dominant side as I'm recording the alert there. Okay, so that's it. Let's see what the JOLTS numbers do to the market today, see if they have any effect on the market, and see how we end by the end of today's trading session. So with that, have a great day, and as ever, thanks for watching. See you in the next one.